Tax season can be stressful, but many taxpayers miss out on valuable deductions and credits that could lower their tax bill. While common deductions like mortgage interest and charitable donations are well known, there are several hidden tax breaks that people often overlook. Taking advantage of these lesser-known deductions can help you save money and improve your financial situation. Here are 10 tax breaks that most people don't use but should consider. 1. State sales tax deduction. Many taxpayers focus on deducting state income taxes but forget about the option to deduct state sales taxes instead. This deduction is especially useful for people who live in states with no income tax. If you made large purchases, such as a car or appliances, you could deduct the sales tax paid on those items. The IRS provides a calculator to estimate your eligible deduction. 2. Student loan interest paid by parents. If parents help their child repay student loans, the IRS treats this as a gift to the child, allowing the child to deduct up to $2,500 of student loan interest on their tax return. Even if the parents make the payments, the deduction is available to the student as long as they are legally responsible for the loan. 3. Job search expenses, no longer available for 2018 to 2025 unless Congress renews it. Although this deduction was suspended by the Tax Cuts and Jobs Act, TCJA, until 2025, it may return in the future. When available, job seekers can deduct expenses such as resume preparation, travel for interviews, and career counseling. Keep an eye on tax law changes to see if this deduction is reinstated. 4. Home office deduction. Many people assume the home office deduction only applies to self-employed individuals, but remote workers who qualify may also benefit. If you use part of your home exclusively for business purposes, you may be eligible to deduct a portion of rent, utilities, and maintenance costs. The simplified method allows a deduction of $5 per square foot, up to 300 square feet. 5. Medical expenses beyond insurance coverage. Medical expenses that exceed 7.5% of your adjusted gross income, AGI, can be deducted. Most people only think about hospital bills, but eligible expenses also include dental work, prescription glasses, therapy, and even travel costs related to medical care. If you or a family member have high medical bills, check to see if you qualify for this deduction. 6. Energy-efficient home improvements. Homeowners who make energy-efficient upgrades, such as installing solar panels, energy-efficient windows, or HVAC systems, may qualify for tax credits. The Inflation Reduction Act extended and expanded these incentives, making it even more beneficial to invest in green home improvements. Some credits cover up to 30% of the cost of eligible upgrades. 7. Educator expenses deduction. Teachers and educators can deduct up to $300 per year for classroom supplies, books, and technology used for teaching. Many teachers spend their own money on supplies but forget to claim this deduction. This benefit is available even if you don't itemize deductions. 8. Child and dependent care credit. Many parents use daycare or babysitters while they work but fail to claim the child and dependent care credit. This credit can cover up to 35% of qualifying childcare expenses, with a maximum benefit of $3,000 for one child or $6,000 for two or more children. Even summer camp costs may qualify if they are work-related. 9. Military moving expenses. While moving expense deductions are mostly eliminated for non-military taxpayers, active-duty military personnel can still claim moving expenses if they relocate due to a change of duty station. This includes costs for transportation, lodging, and storage. This benefit is often overlooked but can provide significant savings. 10. Retirement savers credit. Low and moderate income taxpayers who contribute to retirement accounts, such as a 401k or IRA, may qualify for the retirement savers credit. This credit can be worth up to $1,000 for individuals or $2,000 for married couples, reducing tax liability dollar for dollar. Many workers miss out on this credit simply because they don't know it exists. Taking advantage of these hidden tax breaks can help reduce your tax bill and maximize your refund. Many of these deductions and credits are overlooked simply because taxpayers are unaware of them. Whether you're a homeowner, student, parent, or employee, checking your eligibility for these tax breaks can lead to significant savings. To ensure you don't miss out, consider consulting a tax professional or using tax software that identifies available deductions.